Hey everybody, this is Jim at FreeChartVideos.com using time-honored techniques to understand modern markets. We're going to look at the S&P as it sits after the close on June 17th, 2011. But first, I got to tell you that this video is for educational purposes only, and it is not intended to be used as any form of actual investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your personal financial situation. I'm not a licensed professional, just a guy who draws lines on charts. So let's look at the S&P. Okay, we are looking at a 30-minute chart that, tell you what, let's expand this a little bit so that we see this top that was set up here, what was that, 1370, and you can see that it looked like we were selling off into a really nicely formed bull flag that looked like it was going to be a breakout. Then all heck breaks loose with people freaking out, and it's the end of the world, and Western culture will never be the same, and all that good stuff. And I laugh because 2 years ago, 2.25 years ago, it was also the end of the world. Western culture will never be the same. Look, there are real problems, guys. And every time there have been real problems, there have been people who've said, this is the end, this is it, it's all done, it will never happen again. And history almost always shows these people to be wrong. Because human beings have this amazing ability to be resilient. And if a government fails, then they get back up and they form a new government. If a banking system fails, then they form a new banking system. And right now, I really believe that our innate instinct for survival, not just as individuals, but as a nation and as a society, will right this ship. The only thing that could keep that from happening would be, as one person said a long time ago, all that is needed for evil to triumph is for good men to do nothing. So even if the something you do is make your voice heard at the polls, then do that. All right, I'm off my soapbox now. Let's look at the markets. If you kind of ignore all of my lines and stuff right here, unfortunately, there's no good tool with this chart for me to draw a rounding pattern. So I'm going to try to kind of do this with the oval drawing tool. Don't know if it's going to work or not, but I'll tell you what, let me pause this, plop an oval down, and let me show you what I'm kind of seeing in the S&P from this point to where we are today. There we go. It worked. I'm not saying, excuse me, I'm not saying that that this is a perfect oval and we're going to round back up and head up for new highs, but I think it is very interesting to see the round shape that this sell-off has taken, and we are now past the midpoint of that, which tells me we should be headed back up. Now, to be honest with you, I have not seen a lot of rounding patterns in the markets, and I usually don't even look for them because straight lines don't work with rounding patterns. But this one of the somebody commented on either sent me an email or commented on YouTube or on the website that this looks like a rounding bottom, and they made this observation a few days ago. So it does indeed at this point. However, when we draw the lines also still make sense. And what we had been looking at over the past few days is this descending wedge that is made up of red lines. Then we identified this little this little green line as short-term resistance. And you'll remember that on Thursday, I said, we closed right up here. I said, if we can get over this green line, then I think that might be the signal that this market is turning the corner. And now I've drawn an additional line, which is this, what color should we call that? Let's call it mustard. The mustard line, and it looks like that line is resistance from 1, 2, 3, 4 touches. And if the market can get over this, then I think we may come up, test this purple line here, and if this rounding pattern continues to fulfill, then we may gradually round up and come back for a back test of this orange line. And I'm not ruling out the possibility that that this market could get over this line, but I'm not really expecting it to. If it's really strong, it could, but that is not my expectation. This orange line goes up at a steep enough pitch for us to stay under it from now till kingdom come and still make serious upward gains. And I'm not saying that as a prediction because we have to look at it day by day. But what I am saying is there is plenty of room for a back test of this line that could potentially set a new high. Just like if we had been drawing this line, for example, from this bottom and this bottom, we'd be saying, well, that broke. Well, yeah, but it's not gonna get back over the top of that line. But look, it still has room to go sideways and then up. So we've got what I would call, from this orange line, we've got sideways and up room. This red line right here, I'm looking at as if this turns into something really ugly and we fail to round up and rally, instead we sell down, I look for this to be a support. Let me change the this moving average to 100 periods because we are looking at a 2-day chart. So you can see that the S&P is just above its 200-day moving average, which on this chart, since it's a 2-day chart, is showing as a 100 period moving average. So what are we looking at? Well, like I said, I'm looking at a few different things here. We've got areas of clear support underneath us, and we've got areas that should be pretty clear resistance. I am looking at 1, 2, 3, 4 support lines, and this should be resistance, but I think this may get taken out. If this rounding thing plays out, this line will get taken out pretty soon. Then we'll come back hopefully for a retest of this purple line. If this gets taken out, then I think we are destined to head back to the high 1320s, 1330s. But let's look. You got to play it by ear. We got to look at this really carefully every day, and keep in mind that there is a possibility now that we've seen what we've seen of a potential head and shoulders top that could come into play if any strong rally fails to do any better than that 1370 mark back from late April, early May. So that's the S&P update for today. And I want to remind you that those of you who like to, from time to time, support freechartvideos.com with a small gift, I do have another video that I've produced that is available. A contribution of $10 or more to keep this free service running, and you'll get this video that it looks at 6 stocks that I have been following. A couple of them we talked about a few months ago, that they are now getting very close to what I would call a trigger level. And those 6 stocks are S, that's Sprint, F, Ford, ESC, Emeritus Corporation, LEI, Lucas Energy, SCCO, Southern Copper, and SGI, Silicon Graphics. So look, I appreciate your support. When you get a chance, pop on over to freechartvideos.com, and if you want to support the website with a contribution, you will get that video this weekend, or I send these things out by hand. So as soon as I get your notification, then I will send you the link to that new video. I appreciate your support, and thank you for looking at this video. By the way, I really hope you find value in this. I hope this helps you in some way. That's what it's intended to do. It's not intended to be my political forum or the place where I express my personal opinions above all else. What it really is, I hope, is a place where we draw lines on charts and try to make some sense of these modern markets using time-honored techniques.